Okay, have you ever heard of a tax refund surge? I mean, it sounds a little too good to be true, doesn't it? Well, believe it or not, in 2026, that's exactly what's expected to happen for a lot of us. So today, we're going to break down what's really behind this unexpected windfall, and more importantly, what it means for your wallet. All right, let's just cut right to the chase. The number you're looking at is $3,743. That's the average tax refund that's being predicted for 2026. And if you're thinking, whoa, hold on, that seems high, you are absolutely right. You're not talking about a couple of extra bucks here. This is a huge jump, and it's got a lot of people asking one very important question. Just where is all this extra money coming from? I mean, is it a government mistake? Some kind of new stimulus program we didn't hear about? Nope. The real reason is actually way more interesting, and it all comes down to one single pretty powerful piece of new law. So what's pulling the strings here? Well, it's a piece of legislation with let's just say, a very memorable nickname, the One Big Beautiful Bill. And once we unpack what this bill actually did, you'll see exactly why your 2026 refund is about to get a serious boost. So what is this OBB? Well, in a nutshell, it's a new law that totally shook up the tax code. It brought in some major new deductions that didn't exist before. But the real magic trick here, the thing that makes this whole thing work, is the timing of these changes. That's what created this unexpected refund bonanza. Okay, let's peel back the layers and see how this actually works. It all comes down to a little concept called backdating, which is basically, well, it's like a time travel trick for your taxes. And it's what makes this whole situation possible. This right here, this nails it. I mean, just imagine this for a second. Your boss comes to you in the middle of July and says, hey, you know that great new pay raise we just started? Well, we're actually going to apply it to all the hours you worked since January. That's pretty much what this bill did, but for your tax deductions. This timeline really lays it all out. So for the first 6 months of 2025, everything is just business as usual. Your job is taking taxes out of your paycheck based on the old rules. Then, bam, July hits and the OBB gets passed into law. It creates these brand new deductions, and here's the key, it makes them retroactive all the way back to January 1st. The big problem? Your company's payroll system can't go back in time. For half a year, it was taking out too much money. And that is the bottom line, right there. For 6 solid months, the government collected more money from your paycheck than it was supposed to under the new rules. So now they have to give it back. That's what this refund surge really is. It's not a gift from the government. It's your money that was over-collected, and now they're just balancing the books. So we've covered the how, and that's the tricky part. Now for the fun part, the what. What exactly are these game-changing new deductions that are suddenly putting more cash back into your bank account? Let's take a look. Here they are, the big 3. The OBB now allows you to deduct the interest you pay on a car loan, any overtime pay you earn, and income from tips. I mean, just think for a second about how many people this affects. Millions of us have car payments, work extra hours, or work in the service industry. By making all of this deductible after the fact, the OBB retroactively lowered the tax bill for a massive number of people, which led directly to that big overcollection we've been talking about. Okay, so let's zoom out for a second and bring it all home. What's the final takeaway in all of this, and what does it really, truly mean for you and your finances? Let's boil this whole thing down one last time, super simple. Step 1, a big new bill passes right in the middle of the year. Step 2, its new money-saving rules get backdated to the start of the year. And step 3, that causes an overcollection of your taxes, which has to be paid back to you as a much larger refund. That's the whole story in a nutshell. Now listen up, because if you only remember one thing from this entire explainer, please make it this. This is a one-time deal. It's a financial adjustment, a correction. It is not a permanent tax cut. So when you file your taxes in 2027 and your refund looks a lot more, well, normal, don't be shocked. Think of this 2026 surge as a temporary bonus, not the new normal. So as you're thinking about what to do with that bigger refund, here's a final thought to chew on. This whole situation is a really fascinating peek behind the curtain of how our laws get made, right? It kind of makes you wonder what other kinds of unintended consequences are hiding in future tax bills, and how might this whole backdating strategy be used again? It's a powerful reminder that when it comes to your money and your taxes, the devil is always in the details. Thanks for diving in with us.